robo-taxis are coming to Austin, Texas. Its full self-driving is ready for prime time, planning to launch its robo-taxis in June in Austin. That stock already red hot and up another 3.5% today. The flip side is Rivian. Now, Rivian, they may be gorgeous SUVs, at least I think so, but Bernstein analyst says that does not make it a gorgeous stock. And Bernstein is beginning coverage on Rivian with an underperform and a price target of $6.10 a share. You could see, folks, that's less than half of where Rivian is right now. Let's talk about both. Daniel Roeska heads the U.S. automotive research team at Bernstein. They're suspended with coverage on Tesla, so you could talk macro but not price. But let's start with Rivian. Rivian, great-looking cars. I may or may not know somebody that owned an SUV. I'm winking at the camera. But how'd you get the 610? That's awfully low.
Hey, Brian. We looked at what this company can achieve in the next 5 to 10 years. And we looked at what we think sales can be in 2030, gave that a good multiple, and discounted it back. And we were very surprised to find kind of 3 big misconceptions within consensus. Consensus is wildly overestimating the addressable market for these cars they're going to do. It's not recognizing the capex they have to spend to get to that point. And for some reason, everybody's forgotten about the Volkswagen joint venture that will dilute this equity by 20 to 40%.
Daniel, I thought I was struck. I'm a Consumer Reports subscriber, which means I've now reached full adulthood or something. But I was glancing through the other day their quality rankings, and just out of curiosity, Rivian was at the very, very bottom. Now, interestingly enough, the owner satisfaction scores were actually pretty high. But yeah, I don't know what to make of that. But look, this company just doesn't have scale right now.
No, it doesn't have scale. Look, last year they made 55,000 cars. That's like 3.5 Ferraris. And it's like a sixth of Porsche. And so they don't have scale. The next car, the R2, that has to come. And I think, Brian, you mentioned kind of our low target price, but I don't think we're being unfair in our forecast. We're actually assuming they're going to do everything they told us they would do. We're not giving them a discount on any of their plans, but it's just not enough to make this a compelling equity.
I would just say that they could lighten the suspension a little bit, maybe change or eliminate the one-pedal driving. But I'm just going to say that as a random dude, not as a TV news anchor. Daniel, I'll add this, though. So let's say they outperform your expectations, right? And you have to change it. Would that get you above $6.10 if they sold 20% more cars than even they say?
Yeah. As you can imagine, we've talked to a load of investors in the past 2 days. I think there are 3 big buckets of upside, but making more cars is not it. Because to make more cars, you will need to spend more capex, build more factories, and that just doesn't give you the return you need. You could start selling FSD-like technology like Tesla. Maybe they get to that point. RJ teased hands-off, eyes-off driving the other week. Maybe they can start selling software to other OEMs. But both of those opportunities are maybe $1, maybe $2 on our share price. And so we don't think there is a clear road to really outperforming at this point. And the chart you just had up really shows how much cash they've burned so far. By the time we get to cash flow break even in our model, Tesla will have done that with $23 billion less in cash burn. So by the time Rivian gets to 10 years, they will have burned $23 billion more than Tesla.